following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition, a very special edition of the Power Trading Hour. It is options expiration. Of course, every day at this time that markets are trading, you know what we like to do? We like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, we've got a market that I thought maybe we'd get a little bit more out of it. Options looked like they were pointing to 2280 on the close last night. We're at 2268, 2269. It's been the MO to slowly creep up at the end of the day after the shorts don't get their way, and you have a little bit of a pop. But not much different than we called the day that we came back from the new year, and that is a kind of trendless market, maybe slightly up. And, of course, we've gotten into this part of the month, which is the 20th. Earnings next week, and then, of course, fund buying when we come back the week after that. Probably the weakest part of earnings is over. A lot of the financials were probably a little ahead of themselves by the analysts, but not bad. A lot of the stocks pulled back a little. But most of them have been pulling back on a lighter volume, so there's not a lot there. Today, a little better volume than yesterday, 2.1 billion shares as we start the day, but part of that's options related. Options rollover is Monday and Tuesday, and of course you have enhanced volatility Monday and Tuesday, normally from not in a total range, not where you actually close significantly higher or lower, but intraday trading range, because you've got a lot of options positions that were hedged with actual equity positions. Those have to come in and out. So you've got about 2 days of options rollover. A lot of times, especially this is a busy time. After we come back, you've got a few days of trading. Option market makers start getting a little bit more serious with the amount and size of options positions they're willing to give now that things have started to kind of iron out. Maybe we get a little bit of a pullback in February. Right now, though, I'm looking at charts and I'm thinking, man, there are going to have to be some big surprises, I suspect, to bust us down. Don't see anything yet that would say that would bust us up. But if we continue to see day after day shorts piling in and the market slowly creeping higher out here, my guess is that fund buying at the end of the month could do that. That could set at least a near-term high, but we're still, 10 days away and 6 or 7 trading days away, I think, from that. So nothing that makes me think that we're going lower out here. I don't have a great deal of positions on, and the positions I have on would probably surprise most of the people. I tend to not delve in the sectors, at least in the daily newsletter that I'm in right now, but they've done well. And as I was telling one of my subscribers, if you can make money in a trendless market, then you're living right. And so far, everything doing fairly well. And I think I said earlier I was in the railroads earlier this week, and I will let you know that I'm also in concrete, and it's doing well also. So, there's a few things. Am I going to be able to retire on it? Are they the, 25, 30% down moves in biotech I caught a year ago? The answer is no. That just does not present itself in a market that is this range bound. So if you are making some decent money, I try to normally look for opportunities where I can make 20 or 30%. Now I'm looking for just the absolute best looking charts I can find. That's what I did over the last week or so, is put on positions that literally I couldn't find a better looking chart. There wasn't a lot else to hang on to out here. So, I've got most of my cash sitting on the sidelines and would be more than willing to put it to work, but I need to get a biting move in the markets, and we do not have that. We have the doldrums. We have basically a choppy sea with no real direction, and I don't know what else you can say about it other than that. Was looking this morning for, and even the last few days, for any kind of intelligent discussion about how and the changes a new administration would come up with. And you you hear about 2 minutes of it, and then it goes back to endless drivel. It makes me think of the wise man in Toy Story.
There seems to be no sign of intelligent life anywhere.
Certainly, it was hard for me to see. There was maybe 5-minute discussion of it as I fast-forwarded through most of the financial infotainment. But there was kind of a small discussion, and that was, where is this going? And there was a lot of discussion about being able to write off everything this year as part of the first year of a new tax plan. That would really start to push anything that you can buy that normally would have to be written off of over a number of years. And I think that's why we're starting to see those areas probably perk up a little bit more than the rest. That means if you're buying something that's $10, probably not a big deal for a company to do that. But if you're talking about building a new plant, you're talking about spending a lot of money on various items, maybe items that go in that new plant, items that have to be there for that new building or that production facility that would normally be over and expensed over a number of years. They're going to be, at least that's the discussion in the first tax plan, going to be able to be expensed within this year for tax purposes, and that is a monster for anybody with high-priced equipment. So think about planes, trains, automobiles, anything where some big dough has to be laid out, and you start seeing that maybe a tax policy of instant accounting for those expenses could be monstrous. But other than that, not a lot going on. But you're starting to see a little bit of it. A whole bunch is going to happen. Who knows? We'll see how things are going. 100% of trucks first year. I didn't see that part. A lot of that stuff, like I said, it's been kind of hard to actually find any hard news out here. It's been kind of drivelish, but it's been interesting. When we come back, we'll get to some history. As we like to say, it does not really repeat itself exactly, but it does rhyme. We'll talk about this day in 1981.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
On this day in 1981, minutes after Ronald Reagan is inaugurated, the 40th president of the United States, 52 U.S. captives held at the U.S. Embassy in Tehran, Iran, are released, ending the 444-day Iran hostage crisis. And I think a great deal of that election had to do with the way the U.S. was portrayed, or at least we thought we were. Of course, being the leader of the free world and having a bunch of people in our embassy being held hostage, a lot of people didn't cotton to the idea that an act of war had been perpetrated on the U.S. and that we'd done little or nothing. Of course, after a long time, we had a failed rescue attempt, and it just seemed, for the most part, that the previous president seemed a little impotent when things went that way, and I think it had a great deal to do with the huge landslide of that year's election. On this day, though, in 1981, we had much bigger problems than we have today. I'm still saying never short a quiet market, but there's really not that much going on in the news. I talked about the one thing, which is maybe a little bit more of a tax plan coming out and the winners and losers of that tax plan. But my guess is that we're going to probably start hearing a lot more of that next week. But my thought is that if you sell something or if you have something that actually is a high-ticket item, next week it may not be reality, but at least the news cycle may be pushing those kinds of stocks that people could write off 100%. But I'm going to have to dig in a lot more this weekend to find out the details. In fact, we may not know them until next week, but that's at least the only thing I can really see that may have a trend next week, other than actual earnings and the discussion about how much the dollar is hurting or has hurt individual earnings next year. We're going to get into charts early today. Again, options expiration is today. Options rollover will be Monday and Tuesday. Look for a little enhanced inter-day, but not probably by the close volatility. And then we really get into the heart of those earnings Tuesday night. And really for the next few weeks, we're going to see a great deal of it. But starting to see some of the tech stocks next week into late next week. And then, of course, fund buying. So if we don't have any true disasters out there, I suspect that maybe by the end of the month, we finally hit that Dow 20,000. Maybe we ring the bell there. We'll have to look at it. Volume continues to be rather light up at these levels, but I'm still thinking that we get one nice knockout. And if you are bearish, the thing to do is wait until we get a huge spike with no volume and the shorts quit shorting, because it seems like the same thing is day after day, which is more people short and they end up covering either that afternoon or the next day. One was what we were talking about out here. IBM. Speaking of companies coming out and missing earnings, IBM came out and kind of whiffed. Was down to 163 after the market last night. But you wouldn't tell it from today. A very upbeat discussion in the earnings call and a lot of discussion about probably the hottest topic in Silicon Valley now, which is machine learning. IBM's product is Watson. They talked it up a bunch. And again, way too many shorts for the conditions in this market, including in IBM. It got to 170.62. And that is on what should have been missed earnings. That may tell you a little bit about what we have and how bad you really have to miss to go down. SWKS, Skyworks Solution. This one, blowout, and certainly a if you want to talk about the October 11th high, certainly a breakout with volume. We'll have to go back just a little bit longer, though, to see that we're now running into resistance levels in the $87 range and the $91 range from September 17th, 2015. So you are getting in there. You needed about 5 million shares. You got 12 million already. So you've blown through the December 4th, 2015. You now only need to get up to the September 17th high of 2015, and that only had 2.4 million shares. So this is starting to look pretty good. When I came back from vacation after Christmas, I said I kind of thought that Apple's new discussion about some of the new features in their phone would be enough to get a few people off the shelf and buy a new phone in this cycle. The orders are now really starting to just go out for parts. But look for a lot of these companies that are going to be suppliers to the iPhone 8 have a good at least half of the year. And like I said, there's some features in there that I think, if true, are going to be enough to get people off the couch and into a mobile phone store to pick up their new iPhone. Anyway, nice volume, nice breakout. There were a couple other stocks. I'll have to think about them. I think I wrote them down. Hang on just a second of what's going on out here. BMY said that they are going to have some issues, and the market did not like that discussion very much. And what's going on here? Come on. Having a little internet. Come on. There we go. Bristol Myers down and huge volume, going up against its previous low at $49.03, October 25th. What can you say? This has gone through that low. That low had 15 million shares. We have 59 million shares today. That's pretty close to when this gap down also on the 10th of October was 65 million shares. So can you say that we didn't do enough for that October 10th low? Yeah, but man, it's close enough. And this one is problematic. So you've gapped over yet another bunch of gaps. You've gone down and you've broken at least the previous low, absolute low of October 25th on higher volume. And, of course, you're going up against that 65 million share day from October 10th of last year. So at least BMY looking a little sick these days. I think it had to do with their lung cancer drugs a bit. You can research that more. I did read it. I just didn't really look at it that far. And that's it. If you break this level, you really go back down into the June 5th, 2014 lows at $42.52. So I'm thinking that you probably got a good case to be made that 43.52 would be the next level that you might want to put on if you're thinking about actually buying something like that. But it looks like it's got a little bit more on the way down to go. We're going to the break. When we come back, we'll look at the stocks that gapped up and down today, look at some of the big advancers and decliners, and we'll talk about the rest of it. Give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And on the gap upside today, we've got CF Industry kind of getting back up to its previous high, January 13th. Had let's call it 6.9 million shares, just 5.4 million shares today in a doji. So you want to follow that up on Monday to see how it's doing. Citizens Financial, little gap up there. DXJ, which is the Japan Hedged Equity Fund. This thing's kind of been hitting a trend line on the way down. Wanted to see how this one did. It did gap up, but pretty much gave it all back today. What else do we have? There wasn't any, not monster moves out there. One that had gone to the moon and then come back to hell. And it had a nice bounce this morning, but it gave it a lot of back, and that's Intro Medics. That's ETRM. EWW, Mexico Fund kind of popped after the inauguration today. Halliburton, nice pop up here today, back into its resistance line. That is December 12th at 56.08 with 10.5 million shares. Got into it with January 6th on a little less than 8 million shares, popped back into the trading range. Now today you got 9 million shares, so you're getting pretty close to the December 12th high, but no sign of strength out here, just no sign of weakness. Another energy stock down a little bit today is Hess, but infinitesimally light volume. Watch that one on Monday for a sign of coming back. Merck, a nice pop up today. Volume better than the last 4 days. Still probably not where you need it to be. 25 million shares is probably what it's going to take to bust back up into the $64 range, but at least it's headed up. Noble Corporation, another one testing its previous high of just a few days ago on January 12th that had 12.8 million shares. You got about 10. You may come close today. P&G, Procter & Gamble, nice gap up today on this one. Back up in its resistance line. Did not hold it, but certainly is kind of filling this gap from the 9th of November. That gap had about 12 million shares on the way down. We got 16 million shares on the way up. You really need about 20 million shares from that October 25th high of last year, though. Qualcomm kind of mired in a lot of legal issues. Did gap up a little today, but more of probably an options thing with it trying to expire right at 65. Look for them to try to pin it at that $65 level for expiration today. Winning companies, a little tap higher, but not that much. USO, a little pop in oil. This thing's just at least in the USO, is in this trading range. Kind of got down to the low part of it yesterday. Nice little pop up there today. Quick question is to look at the TLT. And yes, I do think that we're going to at least come back down here and retest the 116.80 level from December 16th. Looks fairly decently like that. Can it take a while to do it? Will it meander down there? Yes. Will it gap straight down? I don't think so. I think we may be able to make some kind of bottom out of the TLT if this thing comes back down on lighter volume to that 116.80 of December 16th. Another one is Tesla. We talk about them pinning TSLA, pinning options so that the most people in an option in the puts and calls, the most people lose their money. I put it in my newsletter today. It's right at 245, and man, is this thing, are they pushing it back and forth to try to get it expire right at 245. There is a ton of money if the option market makers can do it. Look and see if they can pin that at 245 today for the close. That was the gaps up. Let's take a look at gaps down today, see if we can divine anything from it. AstraZeneca gapping down. Looks to me like you've got enough juice to get into this 26.92 December 25th low. Haven't quite got, well, I guess you did. You went a nickel below it today on 8 million shares. So this thing may be a little light out here today. I still think that any kind of buy on this would have you looking at 26.50 and maybe 26.25 and see how it does next week. We talked about Bristol-Myers Squibb already. CSX gap down after, of course, the huge move up on the news that many people are trying to push this as a privatized buyout and or fatten it up for sale to yet another one. CEOs leaving, all that kind of stuff. Huge monster move up yesterday, a little pullback, but again, what did you have for volume yesterday? Almost 100 million shares. And we're into that with 35.5 million shares today. Caught a lot of shorts sleeping in the very last days before options expiration. General Electric had earnings out this morning. Were they that bad? The answer is no, but they weren't good. Volume is higher than the last major low, which is December 1st, that had 45 million shares on 60 million shares. But, you're broken that low. That takes you back down into the 29.65 range, most likely, which is this candle from the 10th of November that you're halfway into. The bottom of that candle is 29.83. So I think you can probably say that most likely I'd look for $30 print on this and maybe a $29 handle come Monday. So that's kind of it for the gap ups and downs. Let's look at percentage advancers today on a narrowly moving market. What do we have out here? Okay. Well, that's not much of a percent mover. We just may not have many of them, where it may be the biggest problem. CF Industries, we already talked about. Cirrus Logic, it had a nice little gap up here I'm pretty sure this was earnings news. Didn't have a chance to look through it. Will this weekend. A little hammer out here. A lot of these companies, every pop is being sold or shorted. To this one, it looked to me, watching the tape, that literally anything that moves can be shorted these days, and everybody is dying to short anything that moves higher. Watch this come Monday to see whether or not you have any follow-through and those shorts get squeezed. My guess is it does hit the $60 sooner rather than later. I can't even say it. Cimex, which I think is a concrete manufacturer also. Let's find out about it. We don't talk about CX very much on this show. Let me look it up here. Come on. Markets, distributes, and sells cement, ready-mix concrete, aggregates, and other construction materials in Mexico. Guess they're getting ready to build that wall. Anyway, nice move. Not so much of the volume out of it today, up to 890. Gets into the December 12th high at 903 that had 15.9 million shares. So maybe you match that volume today. You're certainly into those candles. You get up to 935, and this thing needs 23 million shares. But we're getting back up that way. We shall see. Energy Services, EMES, back up to its high of October 25th, 2016, doing some on extended volume. When we come back, we'll talk more about this one, but it's got ready to come up on its long-term gap down that goes back to August 31st of 2015. So we'll talk about this and much more on an action-packed Power Trading Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Warren in Denver wanted me to take a look at Enterprise Partners EPD. This is a limited partnership. I'm not a real big fan of these LPs for a variety of reasons. Now, if you just look at the chart, though, it looks like it's probably got an 80-90% chance of testing 2924, which is the last major high of June 14th. I'd say, at one point it was a possible ABC, but the energy's really picked up with a huge day of energy coming in that really kind of put an end to this thing going down on the 16th of December. But it's moving back up, $29. I don't know where he's in it or what he's doing with it, but, does it look bad? The answer is no. But the problem is, in a non-trending market, you really got to have a stock with a lot of juice behind it to buck no wind out here. GLBS, some of these things are just off the charts. Noble, pot. I know a lot of people have been talking about this, and no, not that kind of pot. You know the kind I'm talking about. Not that kind. This is potash. Up. I would have liked to see, nice candle. Would have liked to see a little bit more volume out of this. Certainly 1921 is the last high, January 12th. My guess is this is really a bigger trading range from the December 19th low. You've kind of gone sideways out here, and now you're pretty much done with that. And you're going to probably pass up to December 12th, which is 16, which is 1988. If you go back and look at it a longer term, I do see what you're looking at, which is if you break through there, you're up to $21.02. The real thing is, you're going to have to get up to 22 to really move that. We talked about bulk shippers earlier in the week and how if something was really happening on the industrial level, one of the things I really hated was that these bulk shippers weren't seeing any juice. We talked the first day as a sign of strength in Scorpio bulk shippers. SALT has continued that now for 3 days. So these bulk shippers are probably coming in. Like many of the stocks I've been in, you probably want to wait until these things come back. But I would love for this thing to probably come back into that 550 range, maybe in this gap, a little under $6. Maybe have some non-believers. I don't know if I'm going to get that opportunity, but I would like it. SBLK, same thing. These things have finally broken out of these long-term downtrends. They're up, and they have signs of strength. That means that you probably should start now looking at some of those bulk goods that go in the bulk shippers. What else do we have? SHLD. What's Sears doing these days besides going lower? Actually popped up today on a little bit of volume, but I don't think there's anything there to Save It, we already talked about Skyworks Solutions and TK Corporation, which I think is also a tanker. Nice move up on it today, but not a lot of juice in that one. So time to probably go back and look at those bulk shippers and wait for them to pull back and maybe get a run out of them. They have at least advertised the first part of a bull run. What else do we have going on here? This is the percent advancers. Let's go to some percent decliners. And we'll just go through these real quick. Again, you can give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den, which is fairly quiet. ALDR, I don't see anything in that. Again, it's going to be kind of on a day where the broad market's moved, going to be kind of tough. We already did Bristol Myers Squibb. We already did CSX. Did we talk about Fred? We haven't talked about Fred. Fred needs talking about. This thing actually fairly interesting. I would have liked to seen a little lighter volume again today. You had your sign of strength in Fred. In fact, let's find out more about Fred here. Hang on just a second. Fred's Incorporated. Let's get the more thing on this, because this thing did have a sign of strength and has pulled back and given a fairly decent signal today. Let's find out. Together with its subsidiaries, sells general merchandise to its retail, discount stores, and full-service pharmacies. Company throughout its stores offers household cleaning supplies, health, and beauty. So it's a CVS. Don't know much about Fred's or where they're located. I'd have to do a little bit more research before I would place a trade. But the chart looks good. Good sign of strength. You had huge volume. Again, we talked about how you don't want so much volume in the first day that it just burns out if you're already long. If you get a big candle like this, go ahead and take the money. But you do have to like the way this thing came down. I would have liked to seen this thing come all the way back down to this $14.14 level it hit today, not with a increase in volume. Hopefully you get one more move down here, is $14 range, low 14s, and you get it with lighter volume to get an opportunity back there. But pretty good looking chart, as we've talked about probably since mid-fall. How many of these stocks are coming back to these double gaps? And this one's right there. In fact, basically hit it almost to the penny today, down in that low 15 range. RTX. Do we have this one? Heron Therapeutics, just kind of a reversal of yesterday. Again, we've got a lot of these stocks caught in very narrow trading ranges, and this one just didn't have enough juice to break out yesterday, even though it had a lot of volume, could not hold its high. Again, watch these things when they do break out and hold their highs. Normally what you want to be looking at is the opposite side of that, if it's accumulation or distribution. Mallinckrodt had news and spiked down, but no big deal on that one. Parkway Properties. Rite Aid, we talked about that one. Boy, got a little hammer on it today. Not feeling good. Got spanked down, and with some decent volume. Basically gone through all the price upswing since, or at least almost all of it since November 8th out here today. So you may want to keep an eye on this. But again, talk about wild swings in a stock. Certainly you don't think about it in a Rite Aid stock, but it trades like a .com. The Rite Aid, the C-store that trades like a .com. Bankrate, and this one's been up to this gap that it's mostly filled when it came down on monstrous volume on the 25th of February in 2016, so almost a year ago. We've got that gap down with about 8.7 million shares. Been coming into it with very, very light volume. It's just been going sideways at the last of this resistance level. Down today, though, on almost no volume. My guess is it's going to take a little bit more of that gap out. And if it continues on light volume, probably will fail, and probably dramatically. Synergy Pharmaceuticals, SGYP. Down volume has picked up. This thing's starting to get a little bit interesting here at this $5.50 level. Needs some more research. SJT, banging away at these previous $7, mid-$7 highs. Needed 171,000 shares. Yesterday got 600,000 shares. Giving back a little here. We'll talk more about this and many more in the last segment of a wonderful and very special Power Trade Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at SJT, which is a trust that is basically in the Burlington oil and gas interest in that area, in the San Juan Basin in New Mexico and some others. Up here at the highs, it did have volume yesterday, did pull back, but had a sign of strength yesterday, didn't hold it in pulling back. Wait for these because we've got a couple of more days. If crude kind of stays above 50, I think we're going to continue to see these things do a little bit better. If it breaks this area, the next real move is the $9.38 high on September 30th of 2015. So we'll keep an eye out on those. I had a request to run through the FANGs real quick and take a look at them. We'll start with Amazon. Amazon had a very nice retrace. I really disliked this one in the last earnings cycle. It's come back up again. The kind of energy has not been good so far. it's basically in and filled that gap down that happened on the 27th of October. That gap, when it did come down, was on almost 11 million shares. So let's just go through the last few days. 4.8 million shares, 3.7 million shares, 3.6 million shares, 3.6 million shares, 2.0 million shares, 2.5 million shares, and 2.3 million shares. So again, kind of hanging out here, filling the gap you are. Is there a lot more juice to this one? No. Is the same issue that really kind of hit it still there? The answer is yes. They are spending and spending and spending, and people are worried about it come next earnings cycle. Not that it doesn't have revenues and not that it's selling product, just that it spends money, and most of the investors do not like that. Facebook, take a quick look at Facebook. Again, same thing. This thing came down on high volume on the 3rd of November, 64 million shares. Got back into it and filled that gap with 25 million shares. Just kind of been going sideways and a little bit down since then. Any real energy? No. Would I short this? And did I short it? I didn't like it. I just think we're kind of, or at least Facebook, maybe in a bigger pattern that is more like Apple. That is, we may have one more retest of the high out here, and then maybe the wheels fall off of Facebook and come back down as other players in the social networking field do a little bit better. But I just, the energy on the way up, not all that exciting. Does it get back up to the highs? It could. I don't like shorting the market right now, especially with Apple holding up a lot of the NASDAQ. If I saw some more weakness, I'd probably like it a little bit more for a test of the top. I just don't see a lot in it. Microsoft, when we look at Dear Microsoft, looks like this thing has just been going sideways for a while. Now, normally, when you get to highs like this and the thing just goes sideways, you do have to think that distribution is occurring. Light volume and sideways movement is not stuff that you want to see challenging a high. If there is one that's probably setting up for a easier to see pullback, Microsoft does look like it could get back to the 57s, but we will have to see. I think earnings is just too close to talk too much about it. And of course, Netflix had earnings, just way too many shorts. Again, like I said, most of these stocks, do they look that good? The answer is no, but they have far too many people shorting them, and that is the problem. Nice pop on Facebook, though. It's kind of coming back. Maybe this thing feels the gap. I just don't see a lot in Netflix either over the next few weeks. Maybe a lot of backfill. Anyway, we're going to see you Monday. Same bat channel, same bat time. And in the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.